The market has been quite hostile recently. Most altcoins are down except Aerodrome. Aerodrome is going up. The question is why? Who is buying here? Who is selling here? Let's have a look at the on-chain data to try to figure out how much longer this rally could potentially last. Now, Aerodrome is the leading decentralized exchange on the base chain, and it's also the largest token in terms of liquidity. So there's 60 million worth of liquidity in the token. That's even more than Coinbase wrapped Bitcoin. And the chart begs the obvious question. Are we going to return back to $2? We have been there twice. Now we are at 90 cents. So from the current price level, we would still more than double if history was to repeat itself again. Now let's have a look at the usage of the protocol. How much capital is in Aerodrome Finance? How much is Aerodrome Finance been used? What's the tokenomics? What's supply versus demand likely going forward? Now this is the total value locked of all of decentralized finance across every single chain. We had the massive DeFi summer in 2021 that then ended up in an implosion when Terra Luna collapsed and then FTX followed. But since October of 2023, we are recovering, but we are not yet at the old heights of 2021. But again, this is for all of crypto. The base chain was created after the DeFi summer and subsequent collapse. So we can't really compare the tops, but we do see constant growth recently, at least when we measure this in US dollars. Now, this is the base chain. This is not specifically Aerodrome. We get to this in a second. Now, this is in US dollars, but obviously, since crypto is highly correlated, so everything goes up at the same time, everything goes down at the same time, it's probably better to look at the total value locked not in US dollars, but in a cryptocurrency. For example, Ethereum, because the base chain is a layer 2 on top of the Ethereum chain. And unfortunately, we see a peak in April of 2025. There was no more growth since then, rather a decline. So that is interesting, right? The base chain rather sees capital outflows measured in Ethereum, yet the largest decentralized exchange on the chain is appreciating recently in price. Now here's the total value locked measured in US dollars for Aerodrome. And here is the same chart measured in Ethereum. Unfortunately, this chart already peaked in October of 2024. So it seems like something is going on. Why is the price on the way to $2 while the usage of the protocol measured in crypto is not rising? Now here's the decentralized exchange trading volume. So that's the bar chart. Again, it tended to peak at around October, November of last year. And since then is going sideways, potentially even going down. So it's not just the capital that's locked up in the protocol that's got an issue. It's also the usage of the protocol itself, the swapping activity. Now, when we buy an altcoin, let's say we buy Aerodrome over Ethereum or over Bitcoin, we inherently take on more risk. Because there's more price volatility, the price tends to go up and down more, but also we don't really know where Aerodrome will be, say, in 5 or 10 years. We can say this with a bit more certainty about Bitcoin and Ethereum. So there's more risk in Aerodrome. And since there's so much correlation within crypto, we also have to expect more return for Aerodrome. So within our crypto portfolio, Aerodrome is directly competing with Ethereum or Bitcoin. We need to see outperformance versus the market leaders in order to justify the additional risk. And because of that, I like to look at altcoins relative to Bitcoin and Ethereum. So this is now Aerodrome relative to ETH, because again, the base chain is a layer 2 on top of Ethereum. So all the asset prices are highly correlated to the Ethereum ecosystem. Now, since April 2024, we saw Aerodrome slightly underperform Ethereum by 15%. There's somewhat of a constant trading range, which seems to recently narrow to a degree. Within that narrow trading range, the potential risk to reward isn't really that great. But of course, nobody knows if those imaginary lines will hold. So let's have a look at the on-chain data. We now have 614,000 holders on the base chain. So here's the exact wallet count that have at least a few cents worth of the token as a balance. The issue with that number, though, is that there are some arbitrage bots in there as well. There are some wallets that have maybe some residuals that maybe already wanted to sell the Aerodrome token, but in the end made some UI error, potentially some input error, and kept a few cents. So not all of those holders can be taken seriously. And so I like to segregate the holders based on minimum holding thresholds. So how many tokens are held in a particular wallet? Is it 1,000 tokens, as for the chart on the left, or is it 100,000 tokens, as shown from the chart on the right, or 10,000, so something in between in the middle? So we've got small retail on the left, medium-sized retail in the middle, and the whales on the right. 100,000 tokens, by the way, at the current price equals roughly $87,000. We see accumulation across the board. More and more wallets hold the Aero token. Small retail slowed down that accumulation starting in February of this year. Very similar for medium-sized retail. And while the whales initially even sold, they tend to buy back in again since the end of March of this year. And this might partially explain the recent recovery, right? It's the whales that are mainly buying. It's not necessarily small retail. Now those charts are all a 10x apart from one another, right? So 1,000 tokens, 10,000 tokens, 100,000 tokens. But we can go further. What we've got now on the left is 1,000,000 tokens. So that's now $870,000 worth of the token. Again, we see constant accumulation until the end of February, then a sell-off, and since end of March, beginning of April, an accumulation again. For 10 million tokens, we are now mainly talking about market makers and the internal team and smart contract wallets, treasury wallets, etc. So we can ignore this. On the right, the same thing. So is it really solely the whales that are currently pumping up the Aerodrome price? If that was the case, it would be very positive because the whales tend to make the better calls than the average retail investor, right? Crypto is both a game of luck and skill, and the more the game is played, the less important the luck component becomes and the more important the skill component becomes. So the market participants that have more capital, they tended to also, at least in the past, do the better calls. They tend to have more skill. We should tend to follow them more. But maybe there's also some short-term leverage in the price. Now, in the last 24 hours, we had 34 million worth of trading volume on the Coinbase centralized exchange. So that's on the spot market. On the perpetual futures market, we had more trading volume though. 98 million on Orange X, 60 million on Bybit, and 171 million on Binance. We see how the open interest on Aerodrome is suddenly shooting up. So there's more and more bets on the price. There used to be quite a bit of correlation between the open interest on the price and the spot price itself. That correlation tends to break down now. One would expect a much higher spot price when there's so much more open interest on the perps. Probably the reason for that disconnect is that now the majority of perpetual futures traders are betting on falling prices. So the funding rate is negative, which is not usual for cryptocurrencies. When the funding rate is negative, it means more people want to bet on falling prices than on rising prices. The shorts have to pay the longs in order to bet on falling prices. And that might be because people in general are very bearish about Aerodrome, or it might be because of some kind of hidden unlock. So what sometimes people do is they do over-the-counter trades. So they might get tokens for a discount and then get that unlocked a few months in the future. But in order to hedge the price risk, they might short via the perpetual futures at the same time. If there's enough such unlocks, then the whole market gets skewed towards this direction. I'm not saying that that's exactly what's happening now with Aerodrome, but it's definitely a possibility. The tokenomics, so the circulating supply of Aero tokens, is not very transparent. It's not very simple. Have a look at the supply over time. We went from 500 million at launch to now more than 1.5 billion. So we more than 3x'd in the supply. Some of that supply gets locked. Other supply directly circulates. The percent that's locked is somewhat stable at a value of 50. So overall, circulating supply grows quite quickly. It went from 50 million to now more than 800 million, despite the locking mechanism. Locking up your Aerodrome tokens gives more return over time, but the locking duration tends to go down. It went from 4 years to now 3.8 years. So on average, people are now locking for shorter periods. They're not as bullish as they used to be, even the long-term holders. Here's the number of holders that locked Aero over time. Again, this is rather going sideways in the last epochs. And so there are a few mega whales that continue to accumulate Aerodrome, but the perpetual futures is very much negative. The long-term staking numbers are also not that great. Are we going to see the $2 in Aerodrome again? If we do, it's driven by a very different dynamic compared to the past. The current rally is not the same to what we saw at the end of 2024. This was driven by retail. This here is now driven by the whales. The whole market has shifted. It seems like retail isn't really interested in crypto at the moment. Even the number of wallets that hold plain old Bitcoin, that have at least one Bitcoin in their wallet, that number is not rising anymore. It's actually going down since December of 2023. We were above 1 million such addresses. Now we fell below that again. The reason why Bitcoin can continue to rise, the reason why it went from 45k all the way to above 100k, while the number of retail investors went down, is all just because of demand by Wall Street and by the Michael Saylors of this world. Right, the Bitcoin treasury companies. In the last 1.5 years, they bought up 1 million BTC. And so while it might look enticing to buy Aerodrome, because it seems to now at least temporarily defy the overall trend, I don't think this is the best strategy. I don't think it's best to try to pick the needle in the haystack when the odds are against us, when most things are going down. When we zoom out a little bit and we just have a look at the performance in the last year, then Aerodrome made 16% return, while Bitcoin made 61% return. The vast majority of altcoins actually underperformed Bitcoin. So Bitcoin is over here. Here are the few outperformers, but the vast majority did worse. The odds are clearly against us trying to pick winners in this market. Retail is not yet back, and retail buys altcoins. Wall Street doesn't buy altcoins. Wall Street buys Bitcoin and Ethereum, and maybe in the future some Solana as well. The altcoins as a fraction of all of crypto, measured as in others dominance, right? So others is the market cap of the altcoins that are not in the top 10. When we look at that market cap relative to all of crypto, it trends down very consistently. So the small altcoins are poorly performing, and Aerodrome is among those smaller altcoins, right? It's not in the top 10. My strategy in this market is to do the exact opposite of what the masses are doing, because in the end, crypto is a game where there's a few winners and many, many losers. If we do the same thing as most other people, we are getting the result of most other people, and most other people lose, unfortunately. So the way to make money in this market is to go with the trend. So to bet on the altcoins doing worse than Bitcoin or Ethereum. Not necessarily on betting them going down in US dollars in general, because let's say Bitcoin rallies by 2x, then even some altcoins go up, but it's all about the relative performance. Right, we've also got this with Aerodrome. So Aerodrome still went up in US dollars, right? It still appreciated by 16% in the last year, but it did worse than Bitcoin. And just that delta, that can be made into real profit. If we are betting on one altcoin doing worse than Bitcoin or Ethereum, we can already make US dollar gains from that. It's not as straightforward as just buying an altcoin. We have to use decentralized finance, but it's definitely doable if done correctly. I'm following such a strategy already for the last 4 years. So what we see here at the bottom, that's a monthly counter. So how many months have I been trading? And the line in gray is what I would have gotten if I just bought into Bitcoin. So I dollar cost averaged into this portfolio, and in gray is what I would have gotten if I just kept Bitcoin holdings. And in the end, Bitcoin did outperform the rest of crypto. But what we see in black is what I actually got. So I got a better performance than just dollar cost averaging into Bitcoin by betting on top of being exposed to Bitcoin, also on falling relative valuations of altcoins. So this is a real constant performance booster. The reason why most altcoins underperform Bitcoin over the long term is because of the tokenomics. It's because the early investors cash out. It's because the team gets allocated some tokens after a vesting period and then sells their tokens. And because of all of that selling pressure, even though the price itself might slightly go up, when all of crypto is going up, they're still underperforming Bitcoin most of the time. And we can take advantage of that underperformance, as shown here in this chart. I have made a lot of tutorial videos on this topic. It's all part of the premium membership. The most important tutorial videos are over here. Betting on relative valuations via perpetual futures, or how to do risk management with relative valuation bets. Very, very important, because a lot of people get burned by not really knowing how to manage the exposure correctly. But again, the nice thing about this strategy is that we don't pick the needle in the haystack. We don't have the odds against us. We are just flipping this chart, right? So everything that becomes red is now green. Everything that's now green then becomes red. So basically have everything green by betting on relative valuations most of the time. When early investors and insiders cash out, we are making money at the same time. And we are making that money on the backs of the people that don't really know how to play the game, right? That just buy a basket of altcoins, of 10, 20 altcoins, and hope for this to outperform Bitcoin and Ethereum, which obviously doesn't happen long term. Now, individual trades always look very impressive because there's some leverage involved. And if you've got this nicely set up and you don't blow up your account, if you've got your risk management in place with stop losses, etc., you can make really nice long-term gains. And so if you've already experienced how buying altcoins doesn't really get you ahead, then feel free to check out our strategy, right? It's currently $125 per month. The link is down below. It's bitcoinstrategy.com. There should be a link to the website directly over here. Just click on that. It will lead you to the sign up page. And if it's your first time over here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.